Institutional investors are sending a clear message to the crypto market: it's time to get selective. According to recent data, institutions have been dumping Bitcoin and Ethereum ETFs, but they're still buying up XRP and HYPE. This trend shows that institutions are separating their broad crypto risk from targeted altcoin exposure, essentially saying that not all cryptocurrencies are created equal. This matters because it indicates a growing maturity in the market, where investors are no longer just betting on the overall crypto trend, but are instead doing their research and making informed decisions about which specific assets have the most potential. This shift in strategy could have significant implications for the market as a whole, as it could lead to a more nuanced and sophisticated understanding of the different assets and their use cases. It's no longer just about throwing money at Bitcoin and hoping for the best. Institutions are taking a closer look at the underlying technology and use cases, and making decisions based on that. This could lead to a more stable and sustainable market in the long run, as investors are less likely to be caught up in hype and more likely to be making informed decisions. Moving on to another story that's making waves in the crypto world, El Salvador's Bitcoin reserve is facing an accounting reckoning under new IMF pressure. The country's 7,696 BTC reserve is now under scrutiny, and the government will have to be more transparent about its holdings and transactions. This matters because it could have significant implications for the country's economic stability, as well as its relationship with the IMF. El Salvador was one of the first countries to adopt Bitcoin as a national currency, and its reserve has been a subject of interest and controversy. The IMF's pressure on El Salvador to be more transparent about its Bitcoin reserve is likely a sign of things to come for other countries that are considering adopting cryptocurrencies. As more countries begin to explore the use of crypto, they'll need to be prepared to provide detailed accounting and reporting, which could be a challenge for some. It's a reminder that while crypto can offer a lot of benefits, it's not without its risks and challenges, and governments will need to be careful and transparent in their use of these assets. In other news, Bitcoin is hovering below $60,000 as the crypto market prepares for a pivotal week. The price of Bitcoin has been fluctuating in recent days, and investors are eagerly awaiting the next big move. This matters because the price of Bitcoin has a significant impact on the overall crypto market, and a big move in either direction could have far-reaching implications. As we look to the rest of the week, it's clear that regulation is going to be a major theme in the crypto world. In Europe, Germany is leading the charge when it comes to MiCA crypto authorization, with 244 approved companies across EU and EA jurisdictions. This matters because the MiCA deadline is looming, and companies that aren't authorized by July 1st could be in trouble. It's a sign that Europe is taking a proactive approach to regulating the crypto market, and it could have significant implications for companies that operate in the region. Finally, Bitcoin's RSI has printed a key signal that could be a sign of things to come. According to analysis, the RSI divergence is similar to what we saw in the 2022 bear market, and it could be a sign that the price of Bitcoin is due for a big move. This matters because it could have significant implications for investors, who will be closely watching the price of Bitcoin in the coming days. And that's all for today. Tune in tomorrow when we'll be talking about the latest developments in the world of decentralized finance, and how they could change the game for investors and users alike.